Good morning, traders. Please like my video if you get a chance. Retweet me on X. You get a chance, and comments below are appreciated if you're seeing something I'm not seeing. So this morning is mostly about Japan announcing over a $2 trillion initiative to stabilize the bond markets. So heads up on that. That was one of the major concerns last week. We got through the auctions. Now we have what the perception of some major liquidity coming into the bond markets. So be very careful on the short side, guys, going forward here. So I'm starting with the ZNs, the 10-year treasuries. What we've got going on here this morning, which I have to point out here, we have potentially broken out above one tier of a pivot, a potential pivot here into a second tier pivot here on the 10 years this morning, doing a back test on the second pivot as we speak. So be very mindful of that. What I'm seeing here. We've had this downtrend that I've got drawn out here. We are crossing out of that downtrend this morning, so be very mindful of that as well. We are still we are above last week's close, last week's open, but we are still within last week's highs. Okay, so pretty much basically what I'm seeing on this breakout back test of this critical pivot. If that holds, we should be heading to last week's highs in today's session. So that's my primary. This is a bullish setup until it's not. We're looking for this area to hold going into today's session and act as support for the markets. That's my primary thesis this morning. We'll see how it plays out. Okay, so, a different situation here. Okay. Um, actually, it's basically similar. I got this drawn a little bit differently. But basically, we're doing a back test. There's another one right here. There's another pivot right here. So it draw very similar to that to the ZN chart. I got them drawn a little bit differently. Okay, guys. So basically, what we're looking for here is uh, uh, continuation to the upside. We have this downward regression channel. We're outside of that regression channel on the ZBs, so it's acting a little bit weaker than the ZNs. We are below last week's open at the moment. Okay, so just be very mindful of that. That is a headwind here on the ZBs. So our 30-year isn't giving us nearly as clear a bullish signal here this morning. We are up 0.7% so far this morning. But ideally, what we're looking for here, especially being outside the regression, is a back test of this area that holds for a continuation higher. Similar pattern as the uh, uh, ZNs. Okay. And there's a little trend line there. I just noticed when I was watching this right there. So we actually potentially have a trend line breakout as well. So, ideally what we're looking for here is a move back up into last week's highs, a continuation of the morning session rally as we have looked above this critical area, and we want that to become new support in the morning session. So heads up on that. I don't know if that's what's going to play out, but that would be my primary thesis that the bond markets will rally today, giving a relief rally to risk on. So as long as we have a strong session in the bond markets, then that should be a more risk on atmosphere for the broader markets. So be very mindful of that this morning. Okay. /ES. Things going on here on the ESs, guys. Okay. Similar situation here. Uh, uh, this here can actually be changed to green now. We are currently trading above it. So whenever we cross above it, then it gets changed. The color gets changed. I'm just going to put that one there. Okay. As being a major support area now here on the smaller time frames. Okay. So this is, we want to make this new support. We're breaking above it this morning. I'd like to see a back test of that support coming in early into the session, becoming new support to launch the week here. Okay, so you bulls out there, that's what you're looking for. You're looking for this thing to backtest early in the session. Make sure that somewhere around the 58.90 area becomes a buyable dip. So early on in the session, we're looking for a buyable dip. Like I said, 58.92 hold very strong this morning. See how that plays out here. We are still not above last week's open, so we are below that resistance. Be very mindful of that. Uh, I would even feel more comfortable on the bullish sentiment if we were actually opening above last week's open on ESs, which we currently are not. Okay, so just be very mindful of that. Typically, I like to see the above open and or close from the prior week. Above that, I like to be looking into the weekly wick area of the prior week to be thinking that we are getting a directional move. And we're currently trading with inside the body of the last week's candles. So be mindful of that in the back of your mind as you start your session today. Okay. Okay. So we are trying to push out above last week's body. We've already this morning tried to push out above last week's open. So the weekly candle, we are trying to push out above the body of the candle to kick off the Tuesday session. Holiday shortened week, which typically holiday shortened weeks are more bullish than bearish. So be very mindful of that historically. So uh, we definitely want to be mindful of that in today's session. Okay. So I definitely want everybody to be quite mindful of that scenario. Um, so we've had some very wild gyrations in this zone here on the NQs. So we got NVIDIA reporting tomorrow. That's another thing we have to think about here. But this one here is showing a lot of relative strength to kick off the week here. So the idea that we are pushing up above that open there, that you know uh, last week's open there, uh, definitely keep that in the back of your mind here. Potentially poking above that. We have this high right here. This would be the Friday's highs. We've already back tested it here in the pre-market. So be mindful, Monday's highs. Those are Monday's highs. I'm sorry. Those were Monday's highs. So in my opinion, ideally, I would love to see a back test down here at the purple area, at the pink area, 21,236. That if we could come down, back test, to go long, that would be ideal. It doesn't look like we may not even get a chance for that. So we might be opening up here, and then what we'd be looking at here on the smaller time frame, um, we can clearly see that there is a delineation right here. There's another one here I got to put on right here, a supply. Yeah, right there. That right there would be our new resistance at a property. Okay, guys, right there. So that would be our new resistance, and this would turn to green. Okay, and I'm just going to do a easy color here of green instead of the customize. So that's kind of what I'm looking right here. We're kind of floating into a resistance area. So ideally, just be very mindful of that, guys. This could be a short. You're not technically looking above, looking for the back test. You're actually opening into a short right here at 5:22 in the morning. So depending on what's going on here, be very mindful of that. You don't really want to be jumping on board on the long side right out of the gate this morning. We might need a back test to set up for a better long entry. Okay, guys. So, you don't want to be loading the boat to the long side, in my opinion, right out the gate here on the NASDAQ. Just not a bad place, and not the best place. Similar situation here. The Russell. Okay, guys. Oh, I gotta put this back on the daily. I'm sorry. Daily on the Russell here. We have four-year resistance above us here that failed to break out. Uh, on the shorter time frames, we're technically into resistance. So this is going to have a lot to do with the bond markets. So be very mindful of this. Uh, you know, Honestly, given the amount of liquidity we might be seeing Japan announcing there, I'd be very careful. Uh, I don't even want to be shorting up here in the 4-year resistance area. So I really don't want to suggest people shorting here, given the over $2 trillion in liquidity. It sounds like Japan's going to be putting into the markets. So just be very mindful of that. And also remember, guys, the first 100 days tend to be a little more bearish for administrations, and we're now into the second 100 days, and the second 100 days tend to be more bullish, uh, all the way out to about 250 days. 200 to 250 days in the administration, and then there's typically a fairly big correction historically in the markets as the new policies from administration really start to cement into the economy. Okay, so be very mindful that we're technically in a period where it should be a little bit more bullish than bearish. Of course, my cat wants to have all the attention now since I'm talking to you guys. 1 second. Some critical takeaways though on the Russell. The morning gaps tend to fill more often than not on the Russell. And in that scenario, remember, guys, last week's close was down here around the 2040. So last week's close is down here. This regression line, this is a regression channel. That would suggest that there is a decent odds that we could hit this regression channel low again. So in today's session. So be very mindful of that. This is acting as resistance till it's not. So this is actually, in my opinion, very dangerous to be trying to jump into the short. And one other takeaway, going back to the ZBs real quick, I would have felt more comfortable about what the reaction to Japan if the ZBs were actually breaking above last week's opens ahead of the ZNs. Okay, the long end of the curve, it would suggest to me much more confidence in the move. So just be very mindful of that as we start uh, today's session. You know, I would have thought, given the announcement of 2 trillion in stimulus, that um, the ZBs would be repairing much faster than the ZNs. So just food for thought. Another important takeaway this morning, guys. Um, the ZNs are not on the leaderboard for the futures this morning. So that's another little red herring that I'm seeing going on here. You would think, given the Japanese news there, the ZNs would be hot. Probably twice the volume of anything else, and they're not. So just be very mindful of that as we go forward here in the markets. Okay. So our top volume leader on individual indices this morning is NVIDIA. So be very mindful of that. What we'd be looking for is, let's see here. We would be looking for a move, in my opinion. This is a major, we closed below this major break here on the daily. Okay, so we closed down here below that. We're gapping up this morning above it. Okay, or we closed right here on the daily. We closed below it. We're gapping above it this morning. I would be thinking that, coming down, back testing here, okay, doing a back test before I move back up to here is probably the most logical scenario here. Looking for the back test for a potential go long. Remember, the IV is jacked to the hilt on the video. You'd have to do spreads because the earnings are tomorrow. Be very mindful of that. Another big thing happening this morning. Donald Trump Media has made an announcement of a big investment in cryptos this morning. But if I was going to go long Donald Trump Media, I would like to see a back test down in the 27 area before entering potentially here to the long side for a continuation. And guys, if you're seeing how we're rejecting right there, right into this breakdown, you know, so we've actually completed a wake off pattern, a potential walk off pattern there, how we're rejecting right there. So be very mindful of that if you're trying to trade this in today's session. Another one doing very well this morning, and that's Palantir. Almost 128 this morning. We are above these prior swing highs. Heads up on that. This is a bullish continuation pattern, so be very mindful of that. Everything here looks like we'll be retesting those all-time highs, possibly in today's session. So be very mindful of that in today's session. Okay. And if you go down to your smaller time frame, this prior swing high, we're breaking above that this morning. A back test of that swing high right there would be ideal. The 126.30 area, if we could possibly find support at 126.30 to ride this back into the all-time highs would be ideal. So see if that would when we're still fighting this earnings supply right after earnings came out. We're not that far from that earnings supply, but we are, we are what we are, or above it. So yeah, this really looks like a breakout pattern setting up here. Really looks nice. So be very mindful of that. Google is on the radar this morning. We're into last week's wick area. So ideally, if you're on the bullish side of the wick, you're trying to trade with the trend here on Google. So be very mindful of that. On the weekly here, Apple, 199 is what, $4. We're inside of right inside of last week's body. No big thing on that. Hims, which has been very strong here, we're right inside of the last week's body. So Google is the one that's really the outside into a wick area, weekly wick area. Amazon, really small candle from last week, 205. We are up inside the upper wick area. Potential weekly. Uh, uh, be very mindful of that. Upside. I'd only look at it to the upside. Okay, there you go. That gives you some of the stuff that I'm looking at this morning. Hopefully that helps you guys out. And please leave comments below. Like I said, thanks a lot. Time for me to go for my walk.